Hey guys and gals, it's Greg, your Chief Investment Officer, back again with some articles that did well. Interesting articles came through last week. I must say they're really speaking about this one, for example, Americans living paycheck to paycheck. We had another one on unfunded pension liabilities. So it's interesting. It's like a lot of these articles have been in the closet drawer just waiting for a drawdown. So they're coming out pretty thick and fast, which again does scare me a little bit because they might, when you think it's the worst, it probably isn't, right? All right, let's read this one. 58% of Americans are living paycheck to paycheck after inflation spike, including 30% of those earning $250,000 or more. With inflation still near 40-year highs, more than half of all Americans are living paycheck to paycheck. Consumers who are struggling to afford their day-to-day lifestyle tend to rely more on credit cards and carry higher monthly balances, making them financially vulnerable. Even top earners say they are stretched thin, the report found. There's Miss Susie Orman. With inflation at 40-year highs, workers across all income levels are having a harder time making ends meet. As of May, 58% of Americans, roughly 150 million adults, live paycheck to paycheck, according to a new Lending Club report. That's down slightly from 61% who report living to paycheck in April, but up from 54% in May. Even top earners say they are stretched thin, the report found. Of those earning $250,000 or more, 30% are living paycheck to paycheck. Another recent survey from consulting firm Willis Towers Watson estimated 36% of those earning 100% or more are living paycheck to paycheck. Consumers have experienced a tough last couple of years as different factors have affected their financial lifestyle. There seems to be little relief in sight. In Anuj Nayar, Lending Club's financial health officer. Consumers, yes, I wouldn't say all people. Some people have done very well, thank you, over the last few years. With inflation, paychecks going stretch as far, the Consumer Price Index key inflation gauge rose 8.6% in May from a year ago, the highest increase since December 1981, spurred by surging housing, gasoline, and food costs. Those rising prices meant workers took another pay cut during the month. When wages rise at slower pace than inflation, paychecks won't stretch as far as the grocery store or the gas pump, making it more difficult to cover monthly expenses and set money aside. Credit card balances contribute to financial vulnerability. Those struggling to afford their day-to-day lifestyle tend to rely more on credit cards and carry a higher monthly balance, making them financially vulnerable. Overall credit card balances rose year over year, reaching $841 billion in the first 3 months of 2022, according to a separate report from the Federal Reserve Bank of New York. At this rate, balances could soon reach record levels amid higher prices for gas, groceries, and housing, and high credit card interest rates, among other necessities, according to Ted Rossman, senior industry analyst at creditcards.com. For its part, the Federal Reserve has been hiking its target federal funds rate in an effort to calm runaway inflation. Don't get me started. However, anyone carrying a balance will also see annual percentage rate on their credit card beat higher. It continues to raise rates to try and tamp down rising prices. Oof. Just a bit of a virtuous cycle. All right, well, we're getting these articles coming through. They're interesting. Let's take a look at the psychology behind them. Things are bad. Could they get worse, or is this as bad as it's going to get? I guess that's how we find ourselves. So hope you like these articles, these Come Learn With Me sessions. Subscribe and like, and join us again for another session soon. Greg Silverman out for now.